London's main indexes edged lower today, dragged by a slump in shares of mobile operator Vodafone, while investors assess the scope for continued interest rate hikes and their impact on the British economy. Both the FTSE 100 and FTSE 250 were trading broadly flat. A surprise rate hike by the Bank of Canada spooked investors globally, sparking fears that major global central banks could stick to their rate tightening cycles for longer. The Eurozone entered into a technical recession at the start of the year, according to revised data, as an ongoing cost of living crisis continues to pressure households. Figures from the EU Statistics Agency show the Eurozone economy shrank by 0.1% for a second consecutive quarter in the first 3 months of 2023. It was dragged down by Ireland, where GDP fell by 4.6% in the first quarter of this year. Lithuania's economy shrank by 2.1%, while the Netherlands contracted by 0.7%. Germany, Europe's largest economy, shrank by 0.3% and is also in recession. The UK's jobs market is showing signs of cooling as starting salaries for permanent staff rose at the weakest pace in over 2 years. A monthly survey by KPMG and the Recruitment and Employment Confederation found the number of permanent staff placements dropped last month at the sharpest rate since January 2021. It also suggested growth in starting salaries had started to loosen, although the survey still pointed to pay growth well above historic trends. And in sweeping changes to how the digital assets can be marketed in the UK, crypto companies must offer customers a 24-hour cooling-off period. New investors will have to wait a full day before they can complete their transaction. The government estimates up to 1 out of every 10 adults in the UK now own some form of crypto. Bosses of companies that fail to comply could face up to 2 years imprisonment, a fine, or both. And those are your main stories from London at close of business.